Are you tired of buying your cryptocurrency at the top only to see the price come right way down? Wouldn't it be great if you can buy at the bottom and sell at the top? Well, I'm going to share some secrets with you today to really show you how the best in the world do it. If you don't know me by now, my name is Jiggy. I'm the award-winning author of The Extraordinary New Venture Capital Opportunity, How to Invest Like a Pro, been featured in the best-selling book, High Probability Trading Strategies, back in 2008, where I only used to focus on currencies, but now exclusive on cryptocurrency. What most people don't realize is that there's three real key secrets to reading the markets. So most people are 2 steps behind. I'm going to show you how to get 2 steps ahead of the market. And if you're new to the channel, subscribe. We do daily educational content to help you increase your financial health with probabilities but never certainties. All right, let's get started. Today's focus is on ThorChain. So ThorChain is a big project. It's the decentralized and autonomous cross-chain liquidity network. But what we're going to be focusing on is really the technical. We're going to look at the price data, and it tells us the psychology mood of everyone buying and selling ThorChain. And there's particular patterns that you want to wait for, be patient for, and when you see them, gives you a very high probability of winning. And that's what we're going to talk about today. So if we jump into CoinGecko with ThorChain, also known as RUNE, it's $5.36. It's currently a 67th ranked cryptocurrency, meaning out of all the cryptocurrencies, it is currently ranked number 67. We see that over here. The market capitalization, which basically means all the money locked into ThorChain, is $1.6 billion. It's been higher, and the trading volume is around 200 million, which is pretty decent. It's pretty decent. So what we're going to look at now is really the price. I'm going to share some secrets with you. There's 3 main things we're going to share with you today. The first thing is what you want to know and understand about what moves the price. What causes the price to go up and what causes the price to go down? Well, quite simply is voting, short-term voting. And what I mean by voting is when someone buys the token, they're voting with optimism and that drives the price up. When people are selling, it goes down. So it's more when there's more buyers than sellers, it goes up. When there's more sellers than buyers, it goes down. And then we see some price action. But what we really want to understand is that the markets typically, more often than not, this was discovered through social science back in the 1800s and 1900s, and it applies really well to cryptocurrencies, that the markets moves in 5s and 3s. 5 waves up, 3 waves down. 5 waves up and 3 waves down. And sometimes you'll see the pattern really, really clearly. Now, I've been doing this for over 15 years with the Forex markets and 5 years in the crypto markets. And there's a particular pattern unfolding right in front of our eyes. And that's what we're going to talk about today. So step 1 is what is the pattern position of ThorChain, right? And this applies to any cryptocurrency. So let me just quickly draw this on the side. What we're looking for is a 1, 2, 3, 4, 5 wave up, and then a big A, B, C on the way down, right? That's what we're looking for. Then when this tends to finish, this 3 wave down, a bigger sequence tends to happen on the way up, and then another 3 wave down, right? That's what we're looking for. So the markets are constantly expanding and contracting. When a 5-wave sequence and a 3-wave sequence is complete, the next cycle tends to begin. So when I'm looking at ThorChain, what I'm seeing here is a pretty clean wave 1, wave 2, wave 3, wave 4, and then a wave 5. You see that 5-wave sequence? To make it even clearer, we can draw these wave lines just like this, right? 1, 2, 3, 4, 5. Then you go, all right, Jagir, but what follows is typically an ABC zigzag, right? ABC zigzag. So remember, we're looking for a 3-wave correction. Now, if you're not used to looking at these charts, it might not be obvious, or if you've been following my stuff for a while, it might be obvious, but can you spot the 3-wave correction? All right, well, this is what I see. So before I draw it, this is the completion of the 5-wave sequence on the upside. But look at this, a big wave to the downside, we call that a wave A. An A, B, C, we call that a wave B. And then another move to the downside, typically in a 5-wave sequence, is a wave C. So this is your 3-wave sequence. This is called a typical ABC zigzag. And this is psychology playing out. There's mass herd psychology, millions of participants globally betting on the price. And most of it is speculation. And people wonder what's driving the price. Well, it's optimism and fear and greed. and a few other emotions. So what we're looking for is an A, B, C. And if I draw it like this, so we can see the chart, now we have a completion, or potential completion, because we can only do probabilities and never certainties. There you have it. That's all you need to know. But the real question is, like, what does this mean and what should we anticipate next? Well, this is where we're going to move up a level, right? This is the second piece. The second piece is knowing that after a 5-wave sequence, 1, 2, 3, 4, 5, so that's an incorrect drawing. Let me just do that again. Particular rules that need to be abided by. 1, 2, 3, 4, 5, and then an A, B, C. What typically will happen is that you'll tend to get continuation of the trend and make all-time new highs, right? And ThorChain looks like that's the pattern is forming. So what we ask ourselves the question is, okay, if this is a 1, 2, 3, 4, 5, it's a 5 of something. Normally, a wave 1, a wave 3, and a wave 5 each break down to a 5-wave sequence in themselves. So what I'm seeing ThorChain as is we are in this part of a macro cycle, the beginning part of this macro cycle. So if that is the case, what we then do is we just say very simply, this looks like a wave 1. And now this looks like a wave 2. And I'll place a question mark to say the wave 2 has not been confirmed. The real ultimate confirmation is if it exceeds this high over here. But we don't want to wait that long. We want to go, but I want to buy at the absolute low. I want to be buying down here, selling up here. I want to be buying down here if it's likely to go up to all-time new highs. Now, it's never guaranteed, but it's just probabilities. So now what we have is we got our pattern position on 2 degrees of counts. Wave 1, wave 2, that's degree 1. And then we got 1, 2, 3, 4, 5, A, B, C. That's 2 degrees of counts. We can actually do a 3rd degree of count because this wave C, more often than not, breaks down to a 5-wave sequence. And then this, we could actually go 4 waves. We could actually go 4 degrees because this wave here also typically breaks down. So in fact, what we're going to do today, we're going to just focus on pattern and price. That's what we're going to focus on here because as I'm looking at it, this is valuable information. What we're going to do now is we're just going to do this. It's fascinating to me, but you'll see this time and time again. With this wave Cs typically unfold in a 5-wave sequence themselves. And when I'm looking at this looks pretty clean, where we're looking at potential wave 1, 2, 3, 4, and a 5. And we're going to use a minor count. And when it's relevant, it might be a bit of overkill, but I'm going to do it anyway, more for the purpose that you'll see these markets on microwaves repeat themselves and on macro waves. So there's actually another 4th degree of count. Can you see it? It's another 5-wave sequence. Can you see it in this area? Can you see a pattern? Well, if you look closely enough and we zoom in a bit, this wave of 5 over wave C over 2, that's how you label it. This wave 5 over wave C over 2 looks like is also breaking down into a 5-wave sequence. So now it's really, really clear that the more we zoom in, these 5 waves just keep unfolding and unfolding and unfolding. But look at these 3 waves on the upside as well. These very clean ABC zigzag corrections. And when it's this obvious, we want to leverage that information. So 4 degrees of count is overkill, however, because we only really need 2. But for the purpose of this lesson, we can see these patterns unfolding again and again and again. And on this one, we'll go for a micro count. Now we've got 4 degrees of count. Now what we're going to do is we're going to apply Fibonacci ratio. So we've done our first thing. The first secret is these pattern positions, these play out. So this is looking like a textbook ABC correction. But the pattern by itself is good probability, but we can do better. We can do better because now we're going to add something called Fibonacci Price. Fibonacci Price, and we're going to do it on. Let's do it on. We're going to do the wave 2. So I'm going to get this really clear today. I just had a good idea. we're going to focus on the wave 2 is the first degree of count. Then the next one is the wave C. Wave C. Then the next one is the wave 5 of C. Well, technically it's wave 5 of CO2. And then the last one, it's a bit overkill, you won't normally do this, but is a wave 5 of a wave 5 of a wave C of a wave 2. Right, so we got 4 degrees of count over here. I'm just going to change this to a capital, just so it's a bit cleaner. Right, so we got 4 degrees of counts. We'll be consistent. We'll change this one to, there you go. All right, so the first degree is this one here. We got this move up and a move down. That's what we're calling the wave 2. There's a particular Fibonacci ratio that these wave 2s typically complete at. And what you want to know from a psychological perspective is that this wave 2 is simply a retest of the wave 1. And there's a typical ratio that it comes down to. And if it holds, it often acts as a launch pad for what's called a wave 3. And wave 3s tend to be a 1.618 of this wave, which will be up here. So let's just quickly see if this is worth our time, because you can go, yeah, I only look for projects that have a certain amount of potential, upside potential. Well, this is the particular range that we're talking about potentially. We're talking about ThorChain going today from $1.80 to potentially $9 to $14. Right? That's what we're talking about over here. But focusing on this wave 2, that's what we're going to focus on. Is we want to see, is it a high probability wave 2? But we're going to do something called a retracement, and then we're going to fly through this now. Because if you want to join my private Telegram and my workshops, I've literally got a workshop starting in 20 minutes. 20 minutes, we do workshops different days of the week. You can actually buy one of my courses. I got a free Ellie Wave and Fibonacci Masterclass, which I'll talk more about at the end. But if you take the class and you buy one of my courses, you get invited to my private Telegram, and we do workshops. And I'm looking at the time going, okay, I've got 5 minutes to get this across to you before I need to prepare for my workshop. Right, so we're going to do this over here. The typical maximum is 78.6. Basic terms is this red line on a wave 2. And you can see that it's tagged this red line. That is good news for us. That means it's looking healthy. It's looking healthy. So we can get rid of these two. Right, so now we've executed this one. Right, done. Right, we're happy with that. Now we're going to look at the wave C. Right, this wave C over here. This wave as a whole is a wave C. Right, this over here. And it has a relationship to this wave A. And the key relationship is that we're going to measure wave A. We're going to project it from the top of wave C, or B, should I say. And most common is 100%. And then 62%, thereabouts. So you can see it's in that range, And then we're going to do, so we've done this one now. This is a bit overkill when it comes to, we really only need 2 degrees, but we'll do the 5. Now what we're going to do is we're going to do this sequence here, 1, 2, 3, 4, 5. We really want to see, is there a high probability end of wave 5? And there's 2 particular ratios we're going to do. Is an external retracement. By the way, I covered this in my masterclass and my courses, so I'm flying through this, but there's particular key ratios. And what we're looking for is a cluster. And you can see these key ratios are clustering over each other, showing us that this is a high probability psychological wave 2 zone, which is likely to hold. Not guaranteed to hold, but likely to hold. So now we've done this one. There's a couple of other things we want to do as well. I'm going to do one more. I'll just jump through it. We're going to measure wave 1 to 3, project it from 4. And the key ratios is 38, 62. 62 is a key one that I'm looking for. Yeah, it's in that range. Nice. And we don't need this one. All right. And then we're just going to do the last one. All right. We're just going to zoom in. And this can give us valuable information when it comes to very tight entry points. Now, this market has taken off a little bit, so we might want to wait for a pullback. So we'll talk about that in a second. We're just going to repeat what we just did, but on this microwave down here. Over here. And then we'll do this also. Wave 1 to 3 to 4. Again, everything is difficult before it's easy. So I'm flying through this. More that you just see now, these are actually not just random lines. This is a very significant psychological support zone. So now we have a pattern on 4 degrees. We got a wave 5 of a wave 5 of a wave C of a wave 2. That's 4. That is very significant. Very significant. Now we've also got ratios on those 4 degrees that are clustering over each other, saying this is a very high probability resistance zone that we want to pay attention to, very much so. And then the last but not least is momentum. We're going to go on to a weekly chart. I'll keep that in the top left. We want to see that the momentum is pointing up. You can see that the blue line is over the red. Basically, this is pointing up. That says the momentum should be sideways to up over the following few weeks. And then what we do is we take the momentum on the daily time frame, which is the top right hand corner. And what we would have done, we've missed the first catch, but I'm going to show you the next catch that you can potentially get as well, is when you see this pattern forming into this range, what you'll be looking for is the next bullish reversal, which is what we've seen over here for an entry position. But as the market has already taken off, you can see that it's taken off. What we're going to do next is something quite simple. What is the next potential opportunity? All right, this is the game changer. This is the bonus. Look at this. This looks like a 1, 2, 3, a very deep 4, and a potential 5 forming. And then potentially what follows is an A, B, C style correction. So on the next pullback might be a good opportunity for a buying position. But if you're already in ThorChain, really what we want to be looking at is the potential is the next wave 3, which is over here. This is what we're looking at over here. This movement to the upside. The big money is made in the big moves, and you want to ride the trend. The trend is your friend. Ride it until its end, until it reaches its bend. And now this trend is reaching its bend on the downside, and it looks like we're going to get a reversal to the upside. And we're talking about, let's just call it $2 to $9. That's a 4.5x to potentially $14, which is around a 7x. So it's pretty significant for ThorChain. So there you have it. You got momentum. We focused on 4 degrees of pattern and 4 degrees of Fibonacci ratios. Let's now finish up with that. There you have it. There you have it. If you want to learn how to read the markets like a pro, the psychology of seeing the end of a wave 2 before it happens, before the price takes off. Because the big mistake that most people make is they try and buy once the price is taken off, not realizing it's coming towards the end of a trend. And then they get burnt because the price then comes back down. What we're aiming to do is look for the absolute lows from a psychological perspective, take our position, and then ride the rocket ship, so ride the trend until its end. So if you want to learn Elliott Wave and Fibonacci, take my free Elliott Wave and Fibonacci Masterclass. If you like it, buy my course. It's on a 90% discount right now, and you'll get an invite to my private Telegram. We do workshops on the weekend. During the week, we've got a phenomenal community that really helps each other in the space of crypto, blockchain education with a few different strategies. So like, subscribe, hit the bell notification. We do daily content. We're going to finish on a quote from my book. It is chapter 5. It is Leonardo da Vinci. Simplicity is the ultimate sophistication. Let's keep it simple. Momentum, pattern, price. When all 3 coincide, that gives us a high probability setup. That means the edge is in our favor. We are now the casino, and the casino always wins. And when you do that consistently over time, that's how you win the game of what I call crypto tennis, where there's buyers and sellers, and there's winners and there's losers. Your job is to increase your skill set so you can be more consistently on the winning side. All right, I will see you very soon.